Joining us now to discuss, Anthony Esposito is the CEO and founder of Ascalon 6 Capital, and Tom Savidge is an economist for the American Institute for Economic Research. Good morning, gents.
Good morning.
Morning.
So, gents, your thoughts on the incredible GDP numbers in the second quarter that many economists now reveal, you know what, they got it wrong. And you know what, it came in much higher than expected. Let's start with you, Anthony.
Yeah, good morning. The number looks great. 3% number is definitely well ahead of where we thought we would be. We're seeing a few things, and I think they're all positive. We're seeing very little movement, very little contribution from the government side, the government spending side, which is great. We want to reprivatize our economy and have real growth. And that net exports number was a big shift from Q1. So net exports in Q1 was actually a negative draw of about 4.6. That actually flipped completely and was a contribution of about 5% in this report. So net exports numbers look better. Government is smaller. That's good. And we're starting to see, obviously, some commitments on private investment, which will continue to add to that tailwind.
Yeah, thank you for breaking that down, the different components of GDP. It's very important to not just stress the fact that GDP, yeah, it could grow, but based on government spending. So this actually, it grew without that government spending growing as well. So it's a great number here. But National Economic Council Director Kevin Hassett reacted to the news at the White House.
It's really one of the best GDP announcements or releases that you could imagine, because there's blockbuster growth, way above expectation, and there's also a real almost collapse in inflation.
I mean, Thomas, that sounds like the next Fed chair to me. I think he is pretty hopeful about what's to come, and especially since everyone doubted President Trump's abilities to grow our economy.
Well, yeah, it's the key word there is reducing uncertainty, especially in those trade deals. Hopefully more. We see some getting announced. The more that get announced, the more that reduces the uncertainty, because when there's something announced, when there's something put in place there, people can plan around it. And Anthony, I'm really glad you brought up those numbers that are, quote, under the hood, as I like to say, because you can't just focus at the top line numbers. It's good to see government shrinking. One thing that I was a little bit concerned about was seeing some decrease in inflation-adjusted investment there that BEA posted yesterday. And that's something to look out for. But generally, it's good to see growth.
Definitely. And as I pointed out yesterday, when you look at the GDP numbers, yes, it is very good that the government spending has declined. And this president is really focusing on the I, business investment. Why is that important? Because, of course, it boosts GDP, but at the same time, it creates more jobs. And he's also focusing on shifting the balance in terms of exports and imports through tariffs and things of that nature. So he's rebalancing even the GDP formula. But moving forward, the Union Pacific and Norfolk Southern corporations announced earlier this week that the companies will merge to create America's first transcontinental freight railroad. This is exciting news, but there's some people that might be pessimistic in terms of, well, if the economy is growing, why are they merging? Because it decreases competition, but this is actually also bolstering capacity to move things at a lower cost. What say you, Anthony?
These are two names that I know well. In a previous life, I've traded the rail stocks quite a bit. I think it looks like a good merger to me. It's an $85 billion merger. There are 50,000 employees, and it would be the first coast-to-coast rail system put in place between the two. These are all good things. I don't know where we come out as far as competition, but I would say that it's about 2/5 of the total rail system in the country. About a third to 40% of the freight moved would now be between this one merged company. It all seems to be in line for a more efficient system. We'll see how it shakes out, but the merger itself looks to me like it makes sense, and it's a pretty, obviously, a large merger.
True. And